Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition of our Forex Morning Mastery, your daily dose of financial insight and trading strategies. Today happens to be the first trading day of the week, our first edition on the Forex Morning Mastery, and in fact, we have a promising trading setup ahead of the new week. And for those of you who have been with me on my TradingView and Telegram platform, and of course on the YouTube channel, you definitely must have gotten an insight into how we will be planning this week, as I did share a couple of videos during the course of the weekend, which will be a background preparation ahead of today's session. And I do hope you guys have watched that video, as you will be needing it to understand what we will be talking about on the 1 hour time frame. And in fact, I only did two, that is the GBP USD and the XAU USD. So I will be doing a top-down analysis on the USOILSPOT today. So you will be seeing me and you'll be seeing my thought process on how I broke down the chart from the daily time frame right into the 1 hour time frame on the USOILSPOT. So you don't want to miss out on that session. So I encourage you to stay tuned in in that regard. So for this week, we are going to be monitoring three financial assets, which includes the USOILSPOT, the GBP USD, and of course the XAU USD. And for those of you who are joining us for the first time, you are highly welcome on board, and I'm always excited to have newcomers in the house. And you may be wondering, what is it that we really do on the Forex Morning Mastery? Well, like I said earlier, this platform was born out of the necessity to do follow-up details on the asset we are looking at on a weekly basis. So we do this on a daily basis, and as technical traders, we gather here as a community and engage in follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. So it officially kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which at the end of the day, you will be able to use that information to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So I see your comment, Rory Sanksekilo. Good morning to you. Happy new month to you. Hope you had a wonderful weekend out there. So with that being said, here we will be diving right into the business. And of course, as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiment for today and for this week, most importantly. And these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are looking at for this week, we are going to be focusing on economic features from both the United States and the United Kingdom economies. Now, usually we normally focus on high impactful events as they have a high tendency of pushing price significantly. However, in the absence of high impactful event, we usually include mid-tier economic features to have a broader view into what market participants will be looking forward to guide their trading decisions. Now, for today, Monday, March 4th, we do not have any high impactful events. So after including the mid-tier economic feature, you'll see that we have a speech coming up later in the day. It's about I think about 8 to 9 hours from now. We will be looking forward to this speech from what's his name again, Patrick Acker, who is the president and chief executive officer of the 3rd District Federal Reserve Bank at Philadelphia, and is also a serving member of the FOMC, is a voting member, to be precise, of the FOMC, which further gives weight to whatever he will be saying. And usually when we look forward to speeches from Fed officials like this, we look forward to insight into the Fed's monetary policy stance, which of course has been a key cause of concern for market participants so far this year, where we have come from a situation where market participants were looking forward to interest rate as early as the month of March, to the possibility of interest rate push back into the month of May, rate cuts pushed into the month of May stroke June. And from the latest US macroeconomic data, which we saw on Friday, which revealed a less than expected figure, now there is this rejuvenation of the idea that interest rate may likely may start cutting by this month of March. So we want to be looking forward to what he has to say as regards to this monetary policy stance, the economic outlook, and of course future policy actions in that regard. So the anticipation of this speech definitely will be influencing the sentiment in the market, as market participants will closely analyze the future policy direction. So in that regard, we all know as technical traders that the anticipation of such event has a way of influencing the way market participants will behave, and this will definitely reflect on the chart in technical patterns and price action. So we want to be sniffing through the current market dynamics to look out for patterns and structures that we will be using to strategically position ourselves for the next move. And don't forget that we also have some other high impactful events through the course of the week, like the ISM Services PMI, the ADP employment change. We also have the non-farm payroll, which is one of the most important events for this week. And of course, this event that we are looking at has a tendency of inciting an extended sideways trading activity. So we are going to be taking all of this into consideration while we review the current market structure. So with that being said, here we will be diving right into the business, and as usual, the first asset we will be taking this morning is going to be the USOILSPOT. And quite interesting, we've had we had an interesting week. That was last week. It was a phenomenal week, as we will consider the USOILSPOT as one of the most profitable assets on our watch list for last week, as we were able to scoop in take advantage of multiple buy entries, scooping in over 600 to 700 pips throughout the course of last week. And the question now is, will this momentum continue this week, or is there likely going to be some profit-taking activities as the new month began? You know, market participants, investors, and hedge funds managers, will definitely want to be reassessing their portfolio, especially when the new month has begun, to see what they will be doing. And of course, there will be some of their clients who will want to take some profit off the chart after the end of last month. So all of this could likely incite some potential downtrend scenario. So we are going to be taking a look at this, and it's also important for us to understand what is the basis for this uptrend scenario we saw during the course of last week. Well, oil prices have gone up sincerely into we saw it tested the $80.40 level during the course of last week, and this was after OPEC Plus members decided to cut their oil production. They decided to push the oil cuts, which was at 2.2 million barrels, into the next quarter, and this may likely have influenced the demand for oil as market participants hold on a second, please. Okay, so they made this decision to help balance the amount of oil available and keep oil prices steady. Now, OPEC Plus, if you don't know, is a group that includes OPEC members and some other oil producing nation. So at this point, basically at this juncture, they've agreed that they will be cutting oil production by 2.2 million barrels per day for the next few months, which is what many people have expected in the market. Now, this decision was made to support oil prices because there are worries about too much oil being available in the market. There is a high supply in the market, and because some other countries outside OPEC Plus, like the United States, Canada, Kuwait, and some other countries outside the OPEC Plus are increasing their production, which is flooding the market with a high supply of oil, which definitely may reduce the price because due to the surplus of this. So the OPEC Plus members are trying to stabilize prices, increase some demand so that they can thin out this oversupply in the market. Additionally, tensions in the Middle East continues to help keep oil prices high. And yesterday, was it not during the course of the weekend, there was an incident where a ship owned by the United Kingdom was attacked by the Yemeni Houthi militants in the Gulf of Aden, which of course has also incited more concerns as regards to oil disruption from that particular area. So the escalating tension still persists, and all of these factors, if you would ask me, support an uptrend continuation. But we are going to be looking at the chart this morning to see the possibilities the buyers and the sellers have, and see how we can strategically position ourselves for the next move. So stay tuned in. So going into the chart here, we will be starting our analysis from the daily time frame like we always do, and this will help us have an holistic perspective into what is going on in this market. And after taking into consideration the nature of price action since the month of July of last year, we have a key level situated at the $78.50 level. In fact, this level had played a major role in determining the direction of price action in the last 7 to 8 months. And as a result of this, the last couple of weeks, we have been using that key level as the potential neckline of the reversal pattern we saw. Now, let's quickly run through what we saw in the form of a reversal pattern. Now, if you look at the structure since the month of September, we saw how price action dropped significantly, breaking down that key level at the $78.50 level. And since the month of November, price action has been trading below that key level to further emphasize the strength of the sellers at this point in time. And something interesting happened during the month of December, the first week of the month of December last year. We begin to see that despite the strong bearish momentum, sellers were finding it difficult to break through that area between the $68 and $70 level, giving us a situation where buyers may likely be gaining momentum behind the scenes. And when we took into consideration how price had played out between the month of December and at present moment, you will see price action had consistently found higher lows and whenever we identify higher lows like this, we connect them to give us an ascending trend line, which will definitely be what we will be using to guide our decisions. And you know how we use our ascending trend lines. Whenever price action trades above the trend line, we obviously want to be looking out for patterns and structures that supports the idea of buying. Now, in addition to that, we begin to notice that this whole situation here is evolving into a potential reversal pattern where the $78.50 level was serving as a neckline. So we were actually looking out for the breakout of that neckline to give us that signal we are looking out for to buy the USOILSPOT. And we have been waiting for this month for the past 4-5 weeks since the year began. But until last week, we finally saw price breakout of that key level at the $78.50 level to trigger more buy positions for us last week. Now the question as we head into today's trading session is, will price maintain the momentum above this key level, where we may see a situation where price may come back, retest the structure to incite an uptrend continuation, or we could probably see a reverse an uptrend continuation pattern around here, where the breakout of the resistant line of the pattern will welcome more buying opportunities. So you can see how crucial this juncture is for us. And as a result of this, the next thing we want to be thinking of is, how do we position ourselves for the next move? Now, to position ourselves for the next move, I have a setup on the 4 hours time frame, which we will be using to guide our decision. And what I actually did on the 4 hours time frame was to consider the nature of price action since the beginning of the month of February, and that's about an historical data of about 4 to 5 weeks. And one obvious fact here is that price action has been bullish, and in fact we have an ascending trend line to buttress the strength of the buyers in the month of February, as you will see here. Now, with the breakout of the $78.50 level that led into that resistant line at the $80.30 level, which happens to be the highest point price action has been for this year, the question now is, there are two possibilities that will happen here. In fact, we have three. Now, we saw this impulsive move that broke out of that neckline at the $78.50 level. So what we are going to be looking out for today is either price may come back to retest the $78.50 level in an attempt to continue the uptrend move, or it might even break down the $78.50 level right into that ascending trend line, where the appearance or emergence of a reversal pattern will welcome more buying opportunities for this week. Now, the third scenario here is, if the contrary happens, that is, price does not go into the $78.50 zone, but instead transitions into an uptrend continuation pattern, where the breakout of the $80.30 level will be welcoming more buy position at that juncture. So you can see how crucial this area is. So what we are going to be doing now is to scale down into the 1 hour time frame, so we can have an idea into how market participants have been reacting to the structure since the new week has begun. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly, and in fact I already have a buy position triggered at this point in time. Now let's look at what has been going on here since the week began. You will see obviously there was a range bound trading activity through the first let's see 1, 2, 3, 4, 5, 6, 7, 8 hours of the week, as price action was confined within the $79.80 level and the $79.25 area, to emphasize the prevailing uncertainty going on in this market, as market participants juggle between the potential uptrend continuation or a reversal pattern from this particular area. So as the tussle between the buyers and sellers persists like this, we usually exercise patience, waiting for either price breaking down the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of that range to give us an opportunity to buy. Now, with orders placed at both ends, we finally saw price break out of the resistance line at the $79.80 level to trigger a buy position for me. And if price action continues to climb and find new highs, then a breakout of the highest level for this year at the $80.30 level will definitely be welcoming more buy positions for us today. So it's very important that you mark out these levels, as you will be needing them as a reference point to guide your independent trading decisions for today. Now, there's another thing I would like to highlight on this chart. After considering this series of higher lows we have been witnessing since last week, so we will connect the higher lows together, giving us a beautiful ascending trend line to guide our trading decisions going forward. Now, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying. So we may see some selling pressure come in, but as long as price still remains above this trend line, we still hold on to the bullish bias. So what this simply means is that your stop losses will be way below that ascending trend line, giving enough breathing space for price action to move around. So on the USOILSPOT, we maintain a bullish bias at this point in time. However, you know how we do it in this community. We try as much as possible to keep our options as open as possible so that we can be on standby to capitalize on any opportunity the market presents to us at any given point in time. Now, in the case that buyers lost the steam and sellers begin to gain some traction, what are the conditions we want to see on this chart that will make us feel confident joining a bearish move? Well, if we look at this from a technical structure and taking into consideration that range we identified between the $79.80 level and the $79.25 area, it will make quite a lot of sense for us to sell only at the breakdown of the support line of that range, where we will be adding more sell positions if price action goes ahead to break down the $78.50 level. But if we consider the ascending trend line here, we could actually capitalize on a bearish opportunity even before the breakdown of the support line happens. Now, in this case, I would like to see a confirmation before jumping in, like a retest of that ascending trend line where it becomes clear that buyers are finding it difficult to climb back above that ascending trend line, which of course would reflect on the chart as continued selling pressure below that structure to incite a bearish move. Then we can maximize the bearish move by adding more sell positions below the $79.25 level and the $78.50 area. So this is how we are going to be managing a bearish bias in this market. And let me quickly state something here. If it so happens that sellers come in this market, please let's take into consideration this key level at the $78.50 level, which was broken during last week's trading session. And remember how it was serving as a neckline of that reversal pattern we identified on the daily time frame. Now, if price comes back into the structure, it could come back in the form of a retest to incite an uptrend continuation. So if sellers come in and in any way we have a sell position triggered, as soon as price gets into that key level, let's ensure we move all our stop losses, secure the sell position while we exercise patience and wait to see how the market will react to the $78.50 level before deciding to either buy or sell, depending on what comes up around that area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So at this juncture, we maintain a bullish bias here. Remember, I told you that we already have a buy position triggered had a breakout of the $79.80 level. So let's hope that price will continue to the upside. But if it so happens that we get taken out of that buy position and a breakdown retest of that ascending trend line happens, then we will be on standby to join a bearish move. So this is my simple view on the USOILSPOT for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. And please do not forget to click on the like buttons. Your likes are valuable to me and also helps the algorithm promote the video to a wider audience of traders who will find this content beneficial to them too. And we have over 5 people on board at the moment, and we are yet to have we only have 1 likes. Please, I would like the likes to tally with the number of viewers we have on board, and thank you very much as you do so. And for that person who had liked, thank you very much as you have done so. So with that being said, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBP USD, which we newly introduced during last week's trading session. Though we really did not make any significant profit from last week, as the market was more of choppy, as we saw price action caught within a range bound throughout the course of last week to emphasize the prevailing uncertainty in this market. And for those of you who watch my weekend video on the GBP USD, you will definitely see understand what I'm talking about. Like I do say here, during the Forex Morning Mastery, we only analyze the 1 hour time frame. So if you do want to have a background knowledge of how we got to this point you're seeing on the 1 hour time frame, I encourage you to watch my weekend video on this asset. If in any way you missed out on those videos, you can find the link right in the description box of this current video you are watching. So please check them out after the live session to have a better understanding into what we are talking about here. So as it is right now, price action has just broken out of our key level for this week, which was duly situated at the 1.26700 area. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying. And in my commentary this morning, I mentioned that we already have a buy position triggered at this point, and we hope that price will continue to find new highs. Well, the pound sterling at this juncture may have gained support from the hawkish remark from the Bank of England's chief economist, who suggested that the first interest rate cut is not going to be happening anytime soon. And due to these hawkish remarks, we may likely see some positive traction in favor of the pound sterling, as the pound sterling will now become an attractive window for investors, considering the differentials and the idea that interest rate will be kept higher for an extended period of time. And on the underside of the pond, the US dollar remains under pressure following the disappointing macroeconomic data from the from Friday's trading session. Remember, we saw a less than expected figure which affected the treasury bond yield, and we all know how the treasury bond yield is directly proportional to the US dollar. So if the treasury bond yield dips, definitely the US dollar will dip. And at this point, as at this morning while I was checking, the US treasury bond yield is still struggling to gain some momentum, and as a result, this is affecting the US dollar. And additionally, the risk on sentiment in global equity market has further dampened the appeal for safe haven assets such as the US dollar, thereby may provide support for the pound sterling. So in light of this development, we want to try and see how market participants have started this week, especially around that key level we identified on the higher time frame. Now, if we look at this current structure since the week began, the first 9 to 10 hours was more of price action trading within the 1.26670 level, which is the resistance line at that point, and the support line where price action started this week at the 1.26520 area. And you know how we do it whenever we have a range-bound trading activity like this, which emphasizes the prevailing uncertainty in the market at that point. We have no other choice than to exercise patience and wait for either a breakout of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, with the situation we have in mind here, there's another factor which we also took into consideration. Now, for those of you who watch my weekend video on the GBP USD, remember that we did set that price action was currently trading above a temporary demand zone, which we did identify between the 1.262 and the 1.26 area, where we saw how it became so difficult for sellers to break through that zone throughout the course of last week to make it a robust demand zone to guide trading decisions for the week. And obviously, when price action is trading above a demand zone, it doesn't make any sense looking out for selling opportunities unless structures give some significant signal that states otherwise. Now, coupled with the fact that price action was trading above the demand zone, remember we had this descending trend line throughout last week's trading session, which was finally broken on Friday, as you will see here, to further emphasize the strength of the buyers at this juncture. Now, usually when price action breaks out of a trend line like this, we may at some point see price action come back to retest that trend line in an attempt to join an uptrend move. So if it so happens that sellers come in at the first couple of days of this week, we are not going to be keen jumping into a sell position right away, as the bearish momentum could be a potential movement to retest the descending trend line that was broken in anticipation of the uptrend move. However, if you are a counter trend trader, a scalper, or a day trader, or someone who looks out for short-term trading opportunities, you might want to capitalize on that move, as we can be looking at a minimum of about 25 pips. If this is the kind of trade you can take, well, this may be an opportunity for you to join that decline. But for me, if price drops to the downside, what I will be doing is to wait patiently and see how the market is going to be reacting to that descending trend line if ever price action comes into that structure. Now, if we can see a double bottom structure around that area, maybe something like this, if price drops into this area, any form of reversal pattern, maybe double bottom structure, head and shoulder, or falling wedge, we just buy the breakout of the neckline and then join the uptrend continuation. But if price drops below the trend line and selling pressure persists below the structure, we might be seeing a momentum in favor of the US dollar, where a further breakdown of that temporary demand zone could signal more selling opportunities. So this is what we look out for as regards to bearish expectations here. But for the fact that price is trading above the resistant descending trend line we identified, and of course this ascending trend line we captured, for those who watch my weekend video, you will be familiar with this. Since price still trading be above the structure, it makes a lot of sense for us to capitalize on bullish opportunity. So as it is this morning, I made an update where I said price action has already been triggered after the breakout of the resistance line. And for those of us who missed out on that opportunity, you can see price action is back into the structure. So the question now is, will this be a retest of structure in anticipation of an uptrend continuation? So it's a move worth risking. So buying around this area makes a lot of sense at this point, while we continue to monitor price action here. And to further help us guide our trading decisions going forward, I would like to connect the series of higher lows, which is evident since the beginning of this week. Now, if we bring out our line chart and do some little connection here, you will see we have something to work with and guide our trading decisions for today. So as long as price remains above this ascending trend line, we shall feel comfortable in that buy position. So I would encourage us all to mark out this trend line as well. So we are looking at something like this. Price may come back, do some couple of rejection, and then continue the uptrend to the upside. So we maintain a bullish bias here on the GBP USD. And if price action continues to find new highs, we have a psychological level at the 1.26800 area, where we can as well add more buy position if price action breaks out that level and continues to the upside. So we want to be having another buy stop order around that area to maximize the potential of this bullish move if price goes ahead to break out of that structure. Then we also have one at the 1.267 to further maximize this move. So let's see how the market will play out from here. And another thing I would like to state here is that we may, for those short-term traders who like to take this, a breakdown retest for short-term traders may incite some selling opportunities around that area. And like I told you, I'm not keen on taking on that one. I wouldn't be selling unless I see how the market reacts to this trend line that we have here. So it's a simple trading setup we have at this juncture. Let's see how the market will react to the structure. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the GBP USD. Let's see how the market will play out, and trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you updates. And if you have any questions whatsoever, or you need me to clarify some certain areas which you find difficult to understand, feel free to let me know in the comment section. And please do not forget to click on that like button. This is the only way, the only and cheapest way you can actually support this community to grow. And thank you very much as you do so. So we have over 9 people on board right now, and the likes are not tallying with the figures we have. So let's make the likes tally with the number of viewers we have on board. And thank you very much as you do so. So I will be taking the next 5-10 seconds off to see if there are any questions, while you also use that time to mark out these levels accordingly on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next and final asset on our watch list for this week. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And what an interesting situation we have here. In fact, first of all, I would like to congratulate every single one of you who capitalized on that bullish momentum from last week's trading session, which gave us over 600 pips in profit from multiple buy entries. Remember, the first half of the week was not rosy at all, as the market condition throughout Monday, Tuesday, Wednesday, and part of Thursday was more of a choppy situation, as price action keeps triggering our position but comes back to entry point, snapping back to the entry point, taking us out at break. Even at some point we had a couple of stop losses too, but thank goodness we were able to stay consistent with our analytical approach, which finally was fruitful at the end of the day, making us recoup some of the losses we made during the week, and of course make some more profit on top of it. Congratulations to everyone who did capitalize on that opportunity. And as it is right now, since the new week has begun, the price of gold has been range bound, consolidating last week gain. As you will see, price action, as at the time I shared my update this morning, price action was consolidating and confined between the $2,086 level and the $2,079.50 level, which shares boundary with our key level for the week at the $2,080 area. Now, let me quickly state here that for those of you who are yet to watch my weekend video, I would encourage you to do so that you can have a background knowledge of how we got to this point you are seeing on the 1 hour time frame. And if you had missed out on that weekend video, you can easily find the link right in the description box of this current video you are watching, so you can check them out after the live session. So as it is right now, we already have a range bound trading activity, which of course we cannot ignore the fact that the US dollar strength has been compromised following the disappointing release of the US ISM manufacturing PMI data, which came in on Friday. And of course, we also had less hawkish remarks by the Fed Reserve officials during the later part of last week. And this weaker dollar stance has acted as a supportive factor for gold prices. And of course, we know that the US Treasury bond yield too is struggling at this point. I think as at weekend, we had about 4.1% on the US Treasury bond yield, dropping about 1.5% for last week. And so if it doesn't recover, the chances that the prices of the US dollar may continue to nosedive to the downside. Now, with the mounting expectations for potential shift in the Federal Reserve's policy stance, the US dollar may find it challenging to gain significant momentum. The data that came in on Friday was the lowest inflation gauge in the last 3 years in the US. Now, due to this, remember we've been contemplating that there wouldn't be any interest rate cuts due to the CPI data we saw a couple of weeks ago, and of course the following data being churned out from the United States reveals how resilient the US economy is, which has resulted in market participants considering the postponement of any interest rate cut. In fact, the Fed chairman also came out to emphasize this, and coupled with additional speeches from Fed officials, we were of the idea that interest rate cuts may be pushed back to either May or June. But with the data that came in on Friday, this has rejuvenated the idea that interest rate may likely be cut by this month. So this idea here is not a very good signal for the US dollar, as out of this uncertainty, market participant may be dropping the US dollar for safe haven assets such as the gold. Now, additionally, a subdued sentiment in the equity markets further bolster the appeal for gold too as well. And the substantial rise, we should not forget that the substantial rise in the US Treasury bond yield may throw all these factors right through the window, welcoming some positive traction in favor of the US dollar. So we need to take that into consideration as well, and I will definitely be giving you updates as at when due on both of my TradingView and Telegram platform. So as it is right now, market participants are likely going to be waiting for the for guidance on the Federal Reserve's approach to interest rate adjustment, leading to prolonged sideways trading activities ahead of this week's U.S. key macroeconomic events scheduled for this week. Remember, I said earlier that we are looking forward to the ADP employment change. We are looking forward to the non-farm payroll. We are also looking forward to a couple of more that are impactful events, which may make key players in the market step aside, waiting for these events to happen to further give us an idea of where price will be going. So this may lead into a choppy market condition, and we could likely see market continue to go through a range bound trading activity between the 2088 and the $2080 area for some time before a signal will come in the form of either the breakout of the resistance line of the 2088, which is the highest point so far for this year, or the breakdown of the $2080 level, which happens to be our key level where we shall be looking out for selling opportunities. And one more thing I would like to emphasize here is that we have our key level at the $2080 area. And for those of you who watch my weekend video on the XAUUSD, I did emphasize why we are using the $2080 level as our key area, guiding our trading activities for this week. And you know how we use our key levels in this community. As long as price action remains above our key level, we obviously want to be looking out for patterns and structures that support the idea of buying, and we are not going to be selling unless this key level is broken to the downside. And if we look at the nature of price action since the new week has begun, we've been seeing some signs of bullish traction here as price action is making an attempt to continue the momentum from last week. So we're still going to be looking out for more buying opportunities at the breakout of the $2086 level, and of course adding more buy positions at the breakout of the highest point for this year at the $2,088 area. So the only condition that will make us to sell the XAUUSD today is for price to break down the support line of that range, which interestingly shares a confluence with our key level at the $2,080 area, aligning with our technical expectation to sell this asset. So let's see how the market will play out, as our center of focus for today's trading activity is simply between the $2,086 level and the $2,080 area. And please, I would like us to also take into consideration the fact that the anticipation of this key US macroeconomic event for this week may likely incite an extended sideways trading activity for the first, second, third day of the week. And remember, on Wednesday and Thursday, the Fed chairman is going to be testifying before the House of Congress, where he will be giving an overall outlook into the economy of the US, the monetary policy outlook, and the projection of the Federal Reserve. So this, of course, will be giving some insight into where price may likely go. So please, we should not ignore the possibilities of a choppy market conditions as everyone look forward to this event. So at this juncture, we shall continue to use this newly identified structure on the 1 hour time frame to guide our trading decisions, where we are looking forward to the breakout of the range for buying opportunities and the breakdown of the support line for selling opportunities. So this is my simple view on this asset for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we round off on today's Forex Morning Mastery. And don't forget to click on that like button. At this point, I'm still seeing 3 likes compared to over 10 people who are on board at this point. We still have 7 more people who are yet to click on that like button. It doesn't cost you anything at all. If you have found this content useful and it has helped you in making your independent trading decisions for today, why not give it a like? And thank you very much as you do so. And of course, your likes will also help this community to grow and also push the video to a wider audience of traders who may find this content beneficial. Thank you very much as you do so. And it's on this note, we will see if there are any questions before we start rounding off on today's Forex Morning Mastery session. If you have any questions, let me know in the comment section. Thank you very much. I see you, Torres Master. Good morning to you. Trust you had a great weekend. Happy new month. Glad to have you around with us this morning. And okay, so I forgot to mention earlier that I already dropped the link to the XAUUSD live window right in the comment box, pinned at the top of the comment box. So you can click on that link, click on the notify me button so you can get notified as soon as we come on live. For those of you who do not know, the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD asset, and it usually kickstart about 5 to 10 minutes into the New York session, and it lasts about 5 to 7 hours depending on the volume of trading activities for that particular day. So I look forward to seeing you guys right in the comment section of the XAUUSD live window. So I think it's on this note, in the absence of no question, it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment, and so far we were able to attend to the 3 financial assets on our watch list for this week, which includes the USOILSPOT, the GBP/USD, and of course the XAUUSD, where we were able to identify simple trading setups that we will be using to guide our trading decisions for today. And of course, I do hope you marked out those levels as we did indicated on the chart. If you have done so, well done and kudos to you. So all we just need to do is exercise patience at this juncture and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in this regard, we do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. So with that being said, we've come to the end of the session, and for those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for tomorrow's trading session, which promises to be another interesting one. Wish you all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.